Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
ICE Brent crude oil futures. A very large bullish harami yesterday after the previous session's gapping move up after the weekend's events. This time prices gapped higher over the 50% Fibonacci line of the December 23 to April 25 move at 78.05, opening right on the middle time, currently at 79.63, of the newly drawn steep and to me uncomfortable early January to early February bullish Andrews pitchfork. And up into what is in effect a fairly free zone over or area overhead, ahead of the August 23 low at 81.86. However, this time the market did not stop, pushing higher still through a lesser Fibonacci line at 82.68, as well as the upper time, currently 83.74, to finally be capped by the dark blue neckline extension, currently 84.84 of the September to November 2024 head and shoulders top. This capped and knocked prices back down to finish up just below the August 23 low at 81.86 of the and now looking further above, we have the October 2018 high at 86.67, then the 50% Fibonacci line November 20 to March 22 move at 87.41, and the July 24 high at 87.95. Now so far today, a higher open, once again, this time just over the August 23 high, and another push higher towards the dark blue neckline above. But so far failing to reach it, and prices have pulled back down in relative terms to a little ahead of the interesting combination of the January 25 high and the 61.8% Fibonacci line of the December 23 to April 25 move. Both those are at 82.68, and we're just looking like an indecisive spinning top at the moment, though with a pretty long head and pretty long tongue and tail on it. Spot gold, a strong reactionary bearish black crow and bearish long black Mariposa yesterday after the previous session's relatively small gapping move higher after the weekend's events. The drop was down through not only the dark blue lower time, currently at 51.34, of the big picture item, which is the dark blue late December 25 to early February 26 bullish Andrews pitchfork, which I still consider able to show the bullish angle of attack of this market, though I maybe, of course, have to finesse this to a shallower bullish shift pitchfork for the same move, should it require it. But in addition, down through the dark blue lower time and both trend lines of the bright red February-based ascending triangle pattern. And that's currently 50.92 to 51.19, closing right within that triangle, or should I say what's left of it, as there's very little left of it. And we are at the tip of the spear on this one. Prices did actually drop all the way down to that key 50% Fibonacci line for the whole late January action at 49.99, and one I've been speaking about quite a bit in recent days. This has thus left us somewhat stranded above target X at 54.40 and target X1 at 55.80, the targets for the bright red ascending triangle. Prices need to revert back upwards and soon to maintain these potentials above. Additionally, I noted today that the action since early February is akin to a small bull channel, not highlighted yet, but it's currently 50.18 to 54.23. And I'm beginning to wonder if this pattern might be taking over or just complementing the bright red ascending triangle pattern. Now, so far today, a pullback higher from the opening back up over the bright red ascending triangle, as well as back within the dark blue bullish Andrews pitchfork. But not that high. Not yet. Bitcoin. A hanging man pattern yesterday, if only just, after the previous session's bullish white soldier. We still have in the midst of the recent action the bright red neckline extension, currently 67,640 of the August 21 to January 22 head and shoulders top pattern. And, as I've said repeatedly in recent times, it is best to keep an eye on this trendline extension. As I said last week and the week before, and I think it is a very prescient quote even now, this bright red neckline extension is a key element in any moves lower, as it is a sentry ahead of the important 50% absolute Fibonacci line at 63,129, end of quote. This statement is still valid today, as this 50% absolute Fibonacci line has halted the declines throughout late February, and as I also warned last week and the week before, and I quote, so please look for any confirmations below rather than just the one close, a common mantra in all such actions, end of quote. Looking below, we have support from the April 21 high at 64,929, just above that important 50% absolute Fibonacci line at 63,129. Whilst above, we have resistance from the October and November 21 highs at 67,058 and 68,977 respectively. In the bigger picture, we still have a very large October 25 to date bearish halfway hesitation in progress, with the primary and secondary targets for this pattern already achieved, leaving just the much harder to reach, and it really is a harder to reach, tertiary target X2 down in the 54,000 zone. I'm starting to have doubts as to whether we will reach target X2 anytime soon. Additionally, as I said last week, we have the potential showrunner for the recent moves, the bright green early October 25 to mid-January 26 bearish Andrews pitchfork, with the market today in between the overhead bright green upper time and actually quite close to it, which is currently at 73,251, and the bright green middle time below, currently at 50,822. There is no change to this point of view right now, but I am of course prepared to finesse this bearish Andrews pitchfork to a shallower bearish shift pitchfork with the same move should this be required, and that is a standing brief at the moment with markets moving higher. So far today, a strong somewhat reactionary move higher up through the October and November 21 highs, as well as the 50% Fibonacci line at 70,929, that's of the November 22 to October 25 move. And that is just short of the bright green upper time. Beyond these, well, we have a small congestion at 73,779 to 74,444, made up from the March 24 high and April 25 low respectively, but then there's not much after that.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.